Welcome, everyone. Welcome to Office Hours with Michael Kitces. So last week, Schwab announced the launch of a new service called Schwab Intelligent Advisory. And while there was a little bit of buzz about it amongst financial advisors, frankly, there was only a little. And so I wanted to talk about the new Schwab offering on today's Office Hours, because I think it's a much bigger deal than most advisors and industry commentators have given it credit to be. And hopefully I won't get myself in trouble with anybody over at Schwab headquarters. But I think the significance of Schwab Intelligent Advisory has really been underestimated in the independent advisor world. But first we need to understand just what the new solution really is. So Schwab Intelligent Advisory is what's now being called a hybrid advisory service, combining together Schwab Intelligent Portfolios, which is their automated Robo asset allocation solution, with live CFP certificates who will provide both upfront and ongoing financial planning advice by telephone or by video conference. So as Schwab explains it, clients get access to comprehensive financial planning, ongoing guidance from planning consultants who are all CFP certificates, automated diversified portfolio implementation with their Robo service, and a customized financial planning dashboard that lets clients track progress towards their goals. And all of this for the Robo price of just 28 basis points with a $25,000 investment account minimum. Now, to be fair, that's 28 basis points plus the cost of the underlying ETFs itself. So that's not the all-in fee. That's just the advisory fee. But that's quite a low advisory fee. And the onboarding will be entirely digital, paperless account opening process, fund accounts using mobile check deposit, etc. And while the media kind of instantly dubbed Schwab Intelligent Advisory as a new Robo service, it's really not. I mean, first of all, Schwab already has a Robo service. It's called Schwab Intelligent Portfolios. This is different because this is really a service that's not just automated investment solutions. It's comprehensive financial planning live with CFP certificates that just happens to implement with Schwab's Robo solution, which frankly, in the end, isn't really that different than Schwab's existing structure, where a prospective client could walk into any Schwab branch, work with a Schwab financial consultant, be invested in any one of Schwab's managed account solutions, which includes Schwab Intelligent Portfolios as just one. They're simply doing it in a digital medium. And so this to me is what I first dubbed a bunch of years ago as the cyborg solutions. Joe Duran at United Capital later called it the bionic advisor. These part technology, part human solutions blended together to serve client needs. In other words, calling this a Robo solution is, I think, a complete mistake. It's not any more of a Robo than Personal Capital is or Vanguard Personal Advisor Services. This is a comprehensive financial planning solution plus investment management delivered by real CFP certificates who will simply use technology to implement client portfolios, frankly, the same way any of us do. The only difference is that Schwab Intelligent Advisory will be doing what most of us do today, virtually. So their face-to-face meetings will be via teleconference, not sitting across the table as we do. And in fact, Schwab is so targeted on the mass affluent with this that they've said not only is it 28 basis points with a minimum of $25,000, but they will cap the fee at $900 a quarter, so effectively it's $3,600 a year, or it caps the fee for any portfolio above about $1.3 million if you do the math. So basically, Schwab Intelligent Advisory is mass affluent financial planning investment management solution. And it's worth noting, I don't think that pricing at 28 bips is just some random number they plucked out of thin air. It's meant to be a direct jab at Vanguard's personal advisor services, which charges 30 basis points for financial planning from a virtual CFP, implementation to a diversified portfolio. But the problem here is that this isn't just a price war competition between Schwab and Vanguard for their digital advice offerings. It's a threat to every single advisor that works with the mass affluent who's going to get caught up in the collateral damage here, which frankly is most of us, especially in the independent RIA community, and particularly amongst those who are solo financial advisors. Now, again, in truth, I don't think Schwab launched this specifically to compete with independent RIAs, especially given that it's the largest custodian for independent RIAs. I actually think the primary target of the Schwab solution is the massive swath of mass affluent investors who are going to suddenly become available and looking for a new financial advisor when the DOL fiduciary rule rolls out in April. Industry analysts like Cerulli have already been saying that the decline in the financial advisor headcount is going to get accelerated by DOL fiduciary, as frankly, a lot of salespeople who aren't really trained or educated to give advice or get paid for advice are going to move on when they have to actually be accountable for their advice. Which means there's going to be a lot of mass affluent investors who are about to lose their financial advisor, or at least their financial salesperson who said they were their advisor, and Schwab wants to fill the void. Now, the irony here is, for the past year or two, all the anti-fiduciary lobbyists have been saying the mass affluent won't be served in a fiduciary environment. And the irony is that what we're now seeing is companies like Schwab and Vanguard saying, yeah, we sure as hell can serve the mass affluent marketplace under a fiduciary standard without commissions. And we're going to do it as level fee fiduciaries at 1/3 the typical fee of today's independent RIA. So basically what we're seeing is, I think Schwab Intelligent Advisory probably wasn't intended as a direct competitor to independent RIAs, but it's going to be a major direct competitor to independent RIAs. Now, this shouldn't be entirely surprising. Those of you who've been following Nerd's Eye View for a while know I've been writing about this for several years now, that companies like Vanguard and Schwab and Fidelity have been doing major hiring spurts of CFP certificates and are increasingly morphing themselves from do-it-yourself trading platforms and asset managers into full-fledged financial advisory firms. And frankly, given their incredible size and scale and the existing brands, they have the potential to compete rapidly and aggressively to start gobbling up growth going forward. We've already seen this from Vanguard, which in barely 2 years lifted Vanguard Personal Advisor Services to over $40 billion of AUM. And the rumor is they've hired over 400 CFP certificates to provide financial planning advice. Now we're simply seeing Schwab fall in line. And let's not forget, the last year, Fidelity bought their own comprehensive financial planning software when they bought eMoney Advisor. Anybody want to guess how long it's going to take until Fidelity offers their own digital advice solution? Now, I would point out here, I don't think this means Schwab is literally going to take your client list if you custody with Schwab and start soliciting them or anything like that. Schwab runs a clean business in that regard. But the reality is that our clients are going to start get blanketed in the first half of 2017 with ads for Schwab Intelligent Advisory. They're going to be on billboards. It's going to be commercials. We saw the same thing with Intelligent Portfolio. Schwab has the resources to do this. But at 28 basis points for our comprehensive financial planning, access to CFP certificates 24/7, which frankly is more than what a lot of us offer, diversified portfolios, financial planning dashboard, it's going to start looking like what a lot of us do today. And realistically, I suspect the depth of what most of us do as independent planners is probably deeper and more comprehensive than what Schwab or Vanguard do. In fact, Schwab's announcement even acknowledged that clients will actually self-onboard themselves into the planning software. But as advisor tech commentator Bill Winterberg pointed out last week, what prospects see is comprehensive financial planning, CFP certificates 24/7, diversified portfolio, financial planning dashboard. In other words, it's going to be hard for the average prospect to tell the difference between what big major trusted brand Schwab says and what small solo advisory firm says. Especially since Joe Bruggenstein at T3 Tech Hub reported last week that the financial planning software solution that Schwab is using is reportedly going to be Money Guide Pro, particularly with their new My Money Guide Labs as the onboarding experience for Schwab clients. So, to say the least, if that's really how it turns out, it's going to be pretty hard for independent advisors like us to differentiate ourselves when we say we do the same comprehensive financial planning investment management and even provide it to clients with the same financial planning software. Now, the last thing I think it's worth pointing out about the launch of Schwab Intelligent Advisory before we wrap up is that I think this is basically the death knell for actual robo-advisors. So as I've written earlier this year, the B2C robo-advisors are already in serious trouble. Growth rates have fallen about 1/3 of what they were a year ago. At this point, most of the major players have already pivoted to the B2B channel or been bought out entirely. The few left standing in the B2C channel are companies like Wealthfront that had a recent CEO change as the founder came back into what will likely be a pivot for the company. And soon Betterment may be the only pure B2C robo-advisor left standing, and even they pivoted to offer 401k plans and an advisor solution as well. And so to the extent that robo-advisors were working at all, virtually all the growth has been Vanguard Personal Advisor Services at $40 billion, Schwab Intelligent Portfolios at $10 billion. Except Vanguard's solution isn't really a robo. It's hundreds of CFP certificates. And now Schwab is saying, we're not happy with our robo solution. We want to move beyond it, offer human CFP certificates in preparation for a fiduciary transition and opportunity they see. So in other words, if Schwab, the largest robo-advisor, actually thought robo was such a good model, why on earth would they launch a financial planner or CFP service? I think what we're actually seeing is Schwab is pivoting away from its robo because despite having $10 billion in it, most of the money, which has been rumored for the past year, is really just coming from existing Schwab do-it-yourself clients who are switching into robo-managed accounts, which is technically good business for Schwab. It's more profitable to have clients in robo accounts than being DIY traders at $9.95 a trade. But it's not attracting much new external business. And so I think the sign you're seeing is Schwab launched Schwab Intelligent Advisory because they see that as a real opportunity to get new business away from other advisors and brokers that are going to be dislocated in DOL fiduciary and using their scale to do it at lower cost and leverage their brand for marketing purposes. Now, it's worth noting that from the perspective of the financial planning profession, I actually think the Schwab shift is really good news. If it works, Schwab's going to have to hire hundreds of CFPs. Vanguard's already hired hundreds of CFPs. Fidelity may soon hire hundreds more CFPs. I think what we're going to find is that major companies like Vanguard and Schwab and Fidelity are going to become the entry pathway for new financial advisors, similar to the role that the big four accounting firms play for CPAs, where you go to the big four first, you work there for a few years, you get your licenses and your credentials, and then you decide what you want to do next. And it's important to recognize that Schwab is primarily targeting this at the mass affluent, down at 25K, up to 1.3 million based on their price structure. And I think that's Schwab's way of narrowing the focus, leaving room for their large RIAs to not be as impacted by this, because the reality that we know from the benchmarking studies is larger RIAs primarily work with wealthier clients north of $1 million. And of course, Schwab has its own private client group into which I'm sure they will try to upsell intelligent advisory clients as their wealth increases beyond the $1 million mark. But still, the reality is that a huge portion of the independent advisor community serves the mass affluent, especially amongst solo advisors. And I think it's going to be a real challenge competing with Schwab. I don't think Schwab was aiming for us directly, but I think we're going to take a hit. You might see a couple clients leave for a lower cost solution. I think the bigger challenge is simply that we're going to watch growth continue to slow for independent advisors. It's going to get harder and harder and harder to win new clients. We're already seeing the decline in referral activity. Now you're going to see more price competition. Now, from the custody business perspective, this could actually be a boon for RIA custodians like Pershing and SSG, which don't have retail divisions to compete against independent RIAs. That may become a differentiator for them to say, work with us, and at least we won't be in competition with you. But the reality is, whether you custody with Schwab or not, whether you use Vanguard funds or not, whether you custody with Fidelity and TD Ameritrade that already have retail divisions, that have launched robo offerings, and I'm betting are going to launch their own digital advice CFP offering soon. The competition is there, whether you custody with them or not. The real question is, what are you going to do to differentiate your advisory firm going forward to handle the competition that's coming? On the plus side, at least, if you run a CFP certificate program, get ready for a big boost in enrollment in the next couple of years as more CFPs start coming in and getting pushed through by large firms, which frankly is notable because 2016 was already the best year for the number of people sitting for the CFP exam since 2007. Financial advice is on the rise. It's good for consumers. It's going to be harder for us that already deliver it and have to compete in a more challenging marketplace. But the bottom line is simply this. Recognize that Schwab Intelligent Advisory is not a robo-advisor solution. It's comprehensive financial planning plus investment management for the affluent at a very low cost, delivered by a CFP certificate who just happens to be virtual. So for all of us as financial advisors that have insisted that clients will pay more for a real face-to-face solution with the handshake at the end and be able to sit across the desk from us, well, we're about to find out for real how much people will pay for that. I hope this is helpful food for thought, though. This is Office Hours with Michael Kitces, 1 p.m. East Coast time on Tuesdays. Thanks for joining us, everyone, and have a great day.